Here's about AI valuations gripping investors as OpenAI's Sam Altman weighs in, trying to allay those concerns. Text this here.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today, your edge when investing.
Good morning, Quasar Markets Live. It's Friday, November 7th. I am flying solo in the chair this morning. BigBeat's beaming in from New York City, but Stephen Flanagan will be here to join me soon to talk about everything in the FX area and more on a macro level. Big idea today, the big thought for everybody, liquidity. Citi says big tech wobble isn't just an AI bubble breath. It's the oxygen level in the financial system. And the canary, believe it or not, Bitcoin, where I come from. So we're going to hit on that a lot today, talk about what's happening in the crypto market and its tech linkage. Bad news for my old roommate, Alex. GTA is delayed again. He's about the biggest fan I know of it. And what we're going to watch today as we get moving here. So good morning, everybody. Good morning, Ida. I see you were the first to say hello. Hope all is well. So tech has definitely been wobbling overnight. You know, Bitcoin came back down below 100K. Did bounce back from that level, but again, not any kind of decisive manner. Will say the one positive I have is when we have hit this 100K level or below, it has seen some spot volume return. So people are actually buying that dip below 100. Question is, can they keep up with the sellers? So far as we get ready to open in about 25 minutes, you know, NASDAQ down about 66 basis points after being down almost 2 points yesterday. So again, we've seen a pullback this week from a high of 637.01, and we are set to open up at 607.84. So, you know, definitely stress across tech. And if we're talking about the NASDAQ, you got to start with the Mag 7 or Mag 8. And what we can see is all of them set to open up so far in the red. Good morning, Mr. Flanagan. Good to see you, sir. We'll have you in just a bit to talk about all of this. But, NVIDIA down 5% over the last 24 hours or so. And again, over the last 2 weeks from 212 to 184. Apple's held up a little bit better over the time frame here. In fact, much better than a lot of the others. Microsoft with a pretty big pullback again, 553 to under 495. So, a solid 10% pullback across Microsoft. Google, similar to Apple, also holding up well. We know Amazon had dropped and taken the huge up on their earnings, and now again also pulling back here about half of their move up after earnings. Meta, where Steve has gone pretty big, is down even more today, 612.90. Again, this was trading at almost $800 earlier this year, down $200 from where it was. Tesla, we will talk more about Elon's pay package. It did go through sort of as expected, quite honestly. And we'll talk more about that and what it means for the company. But 75% of the folks did do it. As I mentioned, BigBeat is in New York. He will be all over your news feeds. And what I mean there is he is going to be on FinTech TV, New York Stock Exchange TV, Schwab, and others between today and Monday. So keep an eye open for him. If you follow him on Twitter at QMBigBeat, you can find out where he'll be always. Sorry, I just got to realize just a little bit of a rainstorm just blew through here on me. As we also look, so Mag 7, like I said, all opening to the downside. Netflix holding up pretty well here at the bottom of its daily linear regression. And we do know it will have its stock split here in a few weeks. And as we start to look at the DXY, as I mentioned, Mr. Flanagan will be in. It's done a pretty big pullback too, again, breathing not unexpected, still up in the upper half of its channel on the linear regression, but below the 100, rejected pretty firmly, in my opinion. I'll find out what Mr. Flanagan thinks at the 200-day MA and see if that matters as much to forex as it does some of the other markets. We'll look at his expertise there. Dow is slated still to open a little bit up here. VIX, again, I talk about it every time it's in 16 or 17, right, that it's time to buy it. Back above 20 here. I think, volatility still at play. Normally, I'm a seller at that 20 level. I might be looking to try to see this 23 area, at least 22, quite honestly, before I'd be looking to sell. Gold breaking back to the upside, slightly trying to get back above 4,000. We will have Peter Thomas on next week to bring us up to date on what he's thinking now. I did watch his show yesterday out of the Middle East. And again, he did talk about that key level is the psychological $4,000 level to watch. Silver up about a percentage point here in the last 24 hours, trading at 48.48. As I mentioned, Bitcoin has regained 100K, but the lack of liquidity there has been worrisome to many. Citi came out, and I saw it across, I think, both CNBC and Market Watch today. I know CoinDesk brought it up yesterday. I've been talking about it here since the drop 2-3 weeks ago, right? That there was no liquidity on the spot market. ETF inflows or outflows have been mostly outflows. And when we've seen some small inflows, they're not what you need to see Bitcoin's price move. I use coinglass.com to track a lot of the on-chain data here. And what you can see here is this is a little bit of a chart on the inflows and outflows. And yesterday we had a nice little inflow day, about $239 million in inflows. The problem is when we saw price actually move up, which would be this yellow line, you can see the amount of volume in the inflows that we were seeing as Bitcoin price went up. We were seeing averages well above $500 million to $1 billion every day. It was an extended run there. And that's what we're sort of looking at. So until that comes back, we still are at the mercy of the perpetual future market, and that's not where we want to be. And Citi came out a little bit, firmer and said not only is the liquidity waning or really weighing on the crypto market, but that it also is what's happening now, and it's moving over to the equity markets, and that we've seen a reserve drain, about $500 billion decline in bank reserves since mid-July, which has tracked right alongside Bitcoin's weakness. So one of the things to keep an eye on, and this liquidity drain is definitely going to equal tech pain, and Citi sees the Santa rally, but only if Bitcoin recovers. So sort of scary to think here, and I am Mr. Bitcoin himself, but we're going to need Bitcoin to lead us out of this liquidity crisis. Not exactly what I think Mr. Flanagan or others probably want to hear, but we are seeing a lot of it. The turning point really was the Treasury general account. It's under 900 billion in historically rebuild pauses around here. So liquidity could ease a little bit. Could we get that? That might be what we need, is that if the markets are at a beach party, liquidity is the tide. And lately it's just been going out and out, discovering who's been swimming in the AI swim trunks. And it's coming to, without a doubt, it seems to be coming directly after the tech stocks next. And they've been getting hit pretty hard. And I do think you're going to see, people asking me, what do I want to see on Bitcoin to think that we are making a true move back up and stabilize, and got to regain the 104 500 level, to be honest with you, is the first key level to keep an eye on. Here, it's right around the fib level that we want to look at from where we dropped here. It comes in right now, right about 105, I guess. Actually, let me get this to the right spot. 105.2 is really the area we're going to need to recover for me over that key fib level to think that we are actually seeing a true recovery. And again, seeing more and more calls started yesterday, really with CoinDesk. We went over it in my crypto room from their side yesterday. I've been talking about it and pointing it out. I mean, I almost celebrate right now when we see on Bitcoin that the spot volume is 10% or more of the futures volume over a 24-hour period. And that used to regularly, and when we are running in the right direction, price-wise, that tends to run at about a 30% ratio. I shouldn't be celebrating moves over 10%. We should be looking for it to return to 30 if we're really going to see Bitcoin make a run back up before the end of the year. And the government shutdown, believe it or not, is weighing on Bitcoin more than others. And the reason for that is we were right on the verge of the release of about 24 ETFs related to Solana, XRP, and some others. Those have all been delayed until we get the government reopening. So all of that liquidity that would be coming into the market as those ETFs would purchase the underlying assets to cover their inflows have been delayed, at the same time that we've seen most of the digital asset treasury companies that matter, the MicroStrategies, the Metaplanets, the Bitminer, the SharpLinks, run out of their current funding raises. So, they're not out of money like they're going out of business. I don't want to send anybody into a frenzy here, but what they do have is they have weighed on the markets more than they normally would, because we don't see that big spot buyer coming in. OG Bitcoin whales especially have been distributing since 2004. Makes a little bit of sense. Keep in mind that most of those OG whales I'm talking about were located in China. And as rules and regulations have opened up more freely in Hong Kong, they're able to do things in a different way than they could previously, where they sort of held Bitcoin and just held it and held it. As speculation and trading was harder to do out of mainland China, that is now not as much of a case. So they have been unloading it, and we had seen that transfer go to the digital asset treasury companies and the ETF inflows. And now that ETF inflows are muted at best, if not outflows, digital asset treasury companies sort of out of money. We need to see that change. We're going to need to see some, probably some quantitative easing before we see it actually come back into play. Or spot just the new whales or the old whales decide it's time to start to accumulate again. Let's take a look about some of the movers here this morning, some of the key pre-market movers so far, starting with Expedia. They are up about 15% between yesterday and today after they raised their holiday quarter revenue guide. Their room nights are up 11%, and their overall bookings are up 12%. And I will say, in general, what we have seen is travel is strong, fintech is soft, and software beats drive selection in the rotation right now. But again, Expedia, nice little move to the upside at 246. This would be a 52-week high. Not sure if it would be an all-time high for them. It does look that way. But travel and Expedia moving to the upside, even as the shutdown weighs on the FAA. As today, a bunch of different airlines were, told to cut, I believe it's 10% of the flights. Affects mostly regional hubs. Places like where I would fly out of here in Dayton, Ohio, are hit hardest. And if you're on the bigger cities, there is, of course, more relief, and international not affected as much. Airbnb, another winner today, up 4.4% on a Q3 beat. Q4 revenue expected to come in at about $2.72 billion ahead of street estimates. Their October demand held up pretty well. Trying to see if I had any other data. I think that was my main data on Airbnb. On the downside, if you are a fan of XYZ, which is Block, Jack Dorsey's company, which is, again, a Bitcoin-based company, not completely. They do a lot of things, but a lot involved with the blockchain and Bitcoin specifically. Down again, almost 17% here. They had a double miss, I believe. They're looking to open up at $61. Their EPS came in about 10 cents short, 15% miss, 54 cents versus 64-cent street estimate. And they even missed top line revenue by about 3%. And again, U.S. fintech data cuts both ways in this risk-off environment. This is one getting hurt by its Bitcoin holdings currently, and the fact that it is on the forefront of tech, and it had a miss. If you miss, you are being penalized. So without a doubt, getting hurt here. Another one that we've been talking about as expected to move to the downside, DraftKings here today, down about almost 7%, 26.11, which would open them up at a 52-week low. They had a wider loss than expected, came in at actually negative EPS, while they did have revenues reported at $1.14 billion, down about 5% versus the estimates. They actually had a miss by 20% on their EPS, and that is definitely draining on them for sure. And again, DraftKings, we've been talking about it. Even Robinhood has been down dramatically, and their volumes were up tremendously, and their revenue and their EPS were hits. And they're tapping into that prediction market. They talked about it being one of their biggest movers there. Let's get back to the good side here. Frog, which is JFrog LTD, is up 30% almost between the 2 days here. Now up 24.84, pulling off of the highs. This was on a huge beat. They were expected to come in around 128 million on their revenue. Came in at 136.91 and had an EPS of 22 cents versus an estimated 16%. So again, we do see some winners. This is a packaged software company, and as I pointed to earlier, we do see software seems to be winning more than hardware right now on the tech side. And again, one of the biggest laggards that we have is NVIDIA today, or at least it was. It moves fast, so you never know. But NVIDIA here down about almost 1.79%, 1.8% after a loss of 3.65% yesterday, weighed on us. So, that definitely is part of it. We got about 8 minutes till the open here. Tick has still been negative most of the morning here. It really hasn't dipped its head positive at all. Advanced decline, the amount of stocks set to open either in the positive or the negative, down at lows of the morning here at negative 1,700. And as I mentioned, Qs or NASDAQ set to open up down about 67 basis points. SPY about 50. Dow Jones was, let me double check that here, was slated to open up slightly. Now Dow Jones is actually down about 30 basis points. Also, gold at 4,000 has regained the 4,000 handle. Bitcoin has regained the $100,000 handle there. We do see some other winners in the morning here so far. OneStream, another one that had an earnings beat here, up about 7.77%. Another earnings beat was on a firm one that really had been taking a little bit of a beating lately, had a nice report. They came in with almost 100%, well, a little over 100% win on their EPS, expected to come in around 11 cents, came in at 22 cents, and their revenue came in at 933 million, beating estimates at 883, up about 6% here this morning. We also saw Akamai Technologies, another packaged software company that had top-line revenue beats of about 1% and an EPS beat of about 13.5%, has them moving to the upside. Monster Energy, so folks are definitely still drinking those Monster Energies. They had both a top-line revenue beat and a pretty good beat of 17% on their EPS, and they are up 4.43%. We mentioned Airbnb already. On the other side of that, laggard so far today, Open Door, which we know has been very volatile, both to the upside and downside, down about 17% today. Again, penalized for poor EPS. They are not making money yet, so that's definitely going to weigh on the markets. While they were expected to lose about 7 cents a share, losses came in more around 12%. They did have a beat on their top-line revenue, so we like to see that. Some other laggards, like I didn't mention Universal Display Corp down about 16% here, and that's after a big loss yesterday. Also, they had a top-line revenue miss of about 13%, EPS miss of 17%. And like I said, they were down 7, almost 8% yesterday, another 16% here today on that miss. Got to talk about Tesla and Elon a little bit, right? Yesterday was the big vote on Tesla, and the board did approve a compensation plan for Musk worth up to $1 trillion over a decade, subject to hitting milestones. According to the filings, if all the targets are met, Tesla's market cap must grow from 1.1 trillion to about 8.5 trillion. So again, you know, does one person deserve this kind of money? Probably not. But if he's going to build a company from 1 trillion to 8 trillion, take it 8x, you know, he deserves to be paid for sure. What else has to be done for him to hit this? First of all, there's 12 tranches. The market cap target, like I said, is 8.5 trillion. They have to come up with 20 million vehicles annually over the period. They need to deploy 1 million robo-taxis in operation. They need to sell 1 million of the Optimus class humanoid robots or equivalent robot output, and they must achieve 400 billion in EBITDA in their later tranches. So, you know, the entire package is structured in tranches, with each tranche tied to both a valuation milestone and an operational metric. If Musk falls short, he may even earn parts, but not full. Why this matters for Tesla: these goals effectively pivot Tesla from an EV maker to a full stack AI robotics company. And mobility and energy also. If the market buys that transformation, valuation multiples may expand. If not, the risk of disappointment definitely grows. You know, what can we look for over the coming months? Watch for announcements and tracking of the robotaxi rollout or pilot programs. Watch for the humanoid robot Optimus progress. Is there any revenue recognition there? What does vehicle production growth scale at? You know, 20 million unit target is a massive, massive increase. You know, they're watching Tesla's margin will obviously matter, since they have that EBITDA trajectory and target of 400 billion. You know, in the market narrative, I would ask everybody here, is Tesla being valued as a car company or as a tech robotic company? I tend to think it's a tech robotic company. I used to think it was a battery company. I've never thought of it as an EV company personally. I always thought their lead in that battery area was really going to be what was the game changer. But I do believe it is the autonomous driving robotaxi. And then, you know, also, again, as robots come on board more and more, I'm not as huge a buyer of the humanoid robots. I think it's going to be more in the specific use cases type area. I mentioned it earlier. One that that my old roommate definitely is not happy about. It for those that are video gamers, and both BigBeat and I both are fans of GTA. They have announced a delay to their kickoff. So they're delaying, they're pushing GTA 6 now to November 19th of 2026 from May. So we have seen, Take Two, which is TTW0, down almost 8% on that news. A little bit of a bounce here in the last minute or so. And it is holding up. I was watching it because it is holding up right at that 50-day MA on that announcement. The hype defers again, and I've seen it started to be called on Twitter instead of Grand Auto, Theft Auto, but Grand Delay Auto. So we'll see what happens there. That is what's trending. We are about 1 minute from the open, so let's see what we get here. As we get into the open so far, tick is still negative, but the Qs are bouncing up slightly from the lows of the day, as is the SPY. We'll see what we get here in just a few minutes. We are open. Let's see what we get. Tick is advanced decline, moved well to the downside, down to almost down 2,600 here at just 2,650. Tick negative 300 off the start. And we do see the NASDAQ sell off quickly right back down to those levels, down 62 basis points. SPY down 48 basis points. Dow Jones gaps to the downside pretty low here, 46,702, 46,670 now, as it continues to get hit. And the small caps, which we look at through the rut, or the Russell 2000, is down about 77 basis points here this morning, as we look to see what happens. VIX, as we mentioned earlier, is above 20. I'm looking at 22 is the area to get out of that trade. Gold did fall here, taking a little bit of a hit on the cash open below the $4,000 level. Bitcoin holding steady just above 100K. Ethereum at 3230. If we look at the Dixie here, 99.56. So not at the lows of the day, but it is still to the downside. And on the open, we do see real estate up about a half a percentage point, along with consumer staples up about a half a percentage point. The material sector up 12 percentage points or 12 basis points, and energy up about 20 basis points. Nothing's down. Well, tech is down almost a full percentage point now, down 90 basis points. And if we look here, outside of Microsoft, not seeing a huge bounce back across the Mag 7 so far. NVIDIA actually first move was to the downside, right to the 50-day MA. It did get a little bit of a bounce there right at the 50-day MA. Apple moving to the downside here on the open, so a little bit of a sell-off there. Microsoft does move to the upside here, a nice little move to the upside, and it is the only in the green right now. Didn't really see any news sparking that. Google down about 1.17, and again, we can see on the cash market has moved to the downside. Amazon sort of up then down, right back where it started. Meta tried to get a little bit of a run to open up the cash market, but still moving to the downside. Now it's 612.94. And Tesla, big move to the downside here, down 3.29%. So again, we are seeing a little bit of a sell-off. Tick has stayed negative throughout most of the morning. Hasn't gone positive since 8 a.m. So tick is still negative 269, although Qs are back towards the lows of the morning here so far. Now at the lows of the morning. SPY down 55 basis points. Dow Jones down also. Bitcoin re-challenging that 100K support level as we speak. We do see WTI and Brent, although down on the cash open, up from where they closed yesterday. We talked about a firm in the open moving to the upside, still now up almost 8% here this morning. Trying to see if anything's really popping to the upside. Do see market access, so this must be up. They had earnings here. So an earnings beat by market access holdings has them moving to the upside, up about 2.56%. They had a revenue beat and an EPS beat here, so they are moving to the upside on that. We spoke about Microsoft. Nike moving a little bit to the upside, back above 62 here this morning. Tick still negative 300. Advanced decline down almost 3,000. So definitely downside risk playing its ugly head here so far this morning. Qs are at the lows of the day. Bitcoin has lost that 100K. Oh, well, now back above it, fighting that 100K handle. We do see financials moving down across the board here. Wells Fargo down almost 2%, HSBC down 2.28%, Citigroup down 2.3% here this morning. The chip sector, Qualcomm, ASML, Intel actually up nicely, almost 2% here this morning. So nice move to the upside by Intel. Most of the other chip names dropping. Wow. Microchip technology really moving to the downside. Seeing most of the airlines, not surprising, moving to the downside here this morning after as they're cutting flights. You see MSTR, Galaxy, all of the crypto names getting hit pretty hard here across the stocks also. So that liquidity is still low also. Tick still negative here. We haven't really seen it move back to the upside. With that being said, Qs are down almost 90 basis points here, trying to go down about a percentage point. So first, 5-6 minutes definitely have us moving to the downside quickly here. We are going to take a 1-minute commercial break while I get a quick drink.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
And I got to mention NVIDIA at the 50-day MA. So is Tesla. Man, it's funny. I don't see anyone running to the door to buy in. Mr. Flanagan says that, yeah, the liquidity is definitely an issue right now. It is definitely getting tied up. Yeah, man, is this where you grab your nose and you look to get in at the 50-day MA, or if you are listening to what Citi said and this liquidity and Bitcoin is giving you your guide, then we're not out of the liquidity crisis yet. So if it truly is Bitcoin that is the canary in the coal mine, I will tell you we are not out of that. It hasn't died yet, but it's not flying as well as it was recently. So that's what we'll see. I do see Mr. Flanagan is coming into the room early to help me out here today with BigBeat being gone. So let's get him in here and see what he has to say today. Mr. Flanagan, how are you this Friday morning?
I'm doing well, Howard. I hope the viewers are doing well. And I love the way you started the show off talking about liquidity, because you nailed it. It is about liquidity. Let's expand on that. We're talking about government shutdown now at 37 days, the longest ever. What exactly is the root of the financial markets reaction and government shutdown? The more the treasury balance expands because the government is shut, they're still taking in receipts. They call that the TGA, Treasury General Accounting, which is now over $1 trillion. Now, that is money that is being held from the economy. How do I know this? Right now, you've got probably an estimated drain of liquidity of in excess of $750 million to the financial markets, which is the money that keeps the machinery going. It's the oil in the engine that keeps the parts from grinding and seizing up. Let's look at that evidence. Look at the amount of money that's being borrowed over the last week from the secured overnight funds rate, right? Banks are having to borrow money. The Fed, recognizing this, has put an end to QT, but quantitative tightening, but not until December 1st.
Right.
Now, the sinister in me that steps back and looks as a foreign exchange dealer, I look at the macro world. Why is this happening? Because politics? Because we're seizing the financial system up? Because we disagree on nicky-knack points? when one side says, here's a continuing resolution, keep the government open and let's sit down and talk. And the other side says, no, no, no. Well, we've tried to pass a government opening how many times, and the other side votes against it. Forget about Democrat, Republican. Why are we doing this? If we know the effect is seizing up the financial markets, we know that people at the bottom of the income rung are getting hurt because food stamps and other things are being held up. People are not working. 700 flights canceled now because we've had to cut back on edge. What are we trying to accomplish? The macro of a foreign exchange dealer in me says, is one side of the political spectrum trying to ruin the economy? Is that how much they hate the president? And I kind of start to go, what is going on? Because I try to look at common sense reasoning, and I really can't come up with it other than some sort of sinister plot. We know that AOC is threatening to knock Schumer out on his reelection bid. Is this what it's come down to? Because I don't see any other logical reason to continue to put the entire economy at risk here. And that's really what I've been investigating and trying to figure out today when I talk.
Yeah, what I'm going to tell you is you're finding out what most of us that live in DC for a long time realize. Yes, they don't the ideology that goes on in those folks' head. They think that they have the answers to the country's problems. They think that only their answer is the answer. And it's not from one side, it's from both, unfortunately, on it. That it comes out, and it comes out time and time again, and common sense doesn't prevail. And there's a lot of things. That's why term limits and many things should probably be in place that we don't have in the US, unfortunately, and I try not to get into too far of the political side of it. But it is, it's what's weighing on the markets, and it is causing a further, problem, within the markets, without a doubt. It is selfish from both sides. It is, and selfish. Yeah. I mean, the Democrats are easier to point the fingers at, but the same way the Republicans could say, I will come to the table and we can talk about it now before we do it. It's just hard from both sides. And it is a big problem, and it is weighing on everything. I'm noticing it, what people don't realize is, and now it is what has happened in what the switch is. And I saw something that Steve wrote where he said that America's mood has just snapped, and that's bigger than any chart. And the election just proved it. And I do see that. And what I mean is, in DC, we know immediately what this government shutdown means, because restaurants and things go down to 20% or 30% of what they normally do. Now that is hitting the rest of America, as I talk to friends that are in the restaurant industry here in Ohio or in retail, and they're saying now it's starting to hit here also. Is like you just said, is now it's starting to hit the rest of America, and it's definitely going to weigh on liquidity everywhere. I've seen more and more talks, more and more people who say, hey, they just lowered my margin, ability at this, firm and or at that firm. So I don't think liquidity gets better, anytime. And part of that is I put here is the data fog from the shutdown also has traders cautious. We're trusting numbers less and less on a daily basis, right?
Howard, again, I don't want to be political. I don't really care about politics. What I look at is the macro picture and the bottom line, keeping it simple. Money, liquidity is very scarce.
Yes.
And interest rates are going up when the Fed cut, right? The borrowing at
I'm so happy you brought that up, and it's something I'm going to be talking about with my room today, because they asked yesterday, because they hear us talk about these correlations and what makes us nervous. So if you could talk a little bit about that, I would love it. I'm going to bring up the chart with the 10-year, if you don't mind, and maybe we could touch on it, because I do think that's what's important. We're at 4.1. We cut And what is going on is the rate is moving in the opposite direction, right?
Correct. And that's why I delved into a subject I hate to talk about on this program and anytime. I don't like bringing politics into financial discussions, but
But you have to, because it's the number one thing moving the market today is this government shutdown. People might not realize it, so we would be remiss not to focus on it, unfortunately. For me, it's more focusing on what the results of it are, not who's causing it, if you know what I mean.
Yes, I do. So, I look at it and I'm getting to the point where I believe that this has sinister background to it. And that's why I am worried. That's why I'm bringing it up. And
Yep.
no doubt, if something you're seeing that a lot of the pragmatists, the people with level heads on the Democrat side, senators, are moving behind in closed doors now to get something done here, because
Yeah, but they emboldened the wide right with the election the other day. So, there, where you are right, and it seemed like going into the election, the mood had been moving to where the moderates were getting a voice they haven't had in a long time. And unfortunately, as a moderate, I feel my voice has been quieted again.
Once again, I would not agree with Steve. I don't think the change is there. I totally disagree with it. Blue states won blue states. In dissecting this guy in New York City, who they're all holding as their champion, dissecting that vote, he had less than 50%. It was not while they say it was a huge turnout, it was still only about 38% of the electoral vote. I mean,
but yeah, see, again, as a DC guy who looks at the numbers differently and has friends that's all they get paid to do. My takeaways that I would tell you are that Democrats showed up in the same levels that they showed up for the presidential election. You don't normally see that. That's where the tide has turned, as they're saying, and Republicans didn't show up anywhere across the country.
But the blue side had the red side had no chance of winning in those elections.
Right? No, I know there were things that run into it, but again, that in both like I said, it's again living in DC for so long, I know what happens and how that pendulum moves, and the pendulum had been moving, like you said, to the Feinsteins and the cinemas and those people of the world were getting their voice heard, and their voice was, we need to end this. The problem is that right now that voice is being heard loudest from AOC and Bernie Sanders and those folks.
So let's go back to liquidity. Liquidity is at a premium right now, and the longer the government shutdown goes on, the worse this is going to get. So that's why I brought in the word sinister. I mean, Why would a politician sit there and smile at the prospect of bringing your economy down? So put that aside now. Let's look for the silver lining, because I always look at the glass as half full.
Absolutely.
So to the viewers out there, let's think about this. The government suddenly gets its act together, and they decide over this weekend that it's going to be an opening. Let's open, and then let's sit down and talk about the issues. Okay, that's very possible that happens this weekend. Now, if it does, where is the silver lining? Well, how about this? The Treasury suddenly has $1 trillion+ that now flows into the system. Now, you're talking stimulus? That's like a massive amount of sugar. That's a sugar rush. So, if you begin to see an agreement, what I'm trying to highlight, the sugar rush to the financial markets is going to be huge. We've never had a shutdown this long. Therefore, we've never seen a sugar rush of liquidity come back to the market like we will see. So when you hear the news, get your hands in, and that's when you want to be buying this artificially created dip. And that's why I disagree with Steve that there's some sort of political change. No, there's not. This is an architected downturn by our government, and that includes both sides. If one side doesn't come to the table, the other side's going to say majority rules, 50 seats, nuclear option, boom, and that's that. And then the other side is out of power. They'll have nothing to be able to do. So it is within everybody's interest to do what politicians are supposed to do, and that is negotiate and come up with an agreement. Otherwise, one side is going to make a move, and the economy is what's at risk, and all of us are on the cutting edge of that risk. So I do see a positive side. I do think that the sugar rush back to the markets will be. The dollar, that's beginning to show some signs of stress. Last week's close was 99.72. We went up and set a new high at 136, taking out the August 1st high in the dollar index at 126. I still think 102, 103 is the objective. However, with what's going on in our government shutdown, I have been saying that when we hear that, I am looking for a sideways pattern. I wouldn't be surprised to see us dip, maybe down to 98, 85, 90 level. But it's a buy the dip because, the money is, I think the dollar index has already begun to turn.
Okay, well, I put the levels in here for everybody. They're the arrows you see. I asked earlier, I don't know if you were listening, is 200-day MA matter as much in Forex as it does in other markets?
Yes, it does.
For the algos and for that stuff.
The 50 versus 200, I think they call that the golden cross.
Golden cross, death cross, yeah.
Yeah, so that's always something to keep in mind. The first time up to if you're below the first time you come up to a 200-day average, you got to respect it.
Right.
But as my boss told me in 1982, when I was doing my little X's and O's on a graph piece of paper, charting out dollar yen, as he walked by me and he said, hey, what are you doing? I go, this is a great level of support here. I think you're going to buy dollar yen and it's going to go back up. And as he walked by me, he smiled and said, good, you keep up that work. And just remember, every ship at the bottom of the ocean has a charting room.
That's right.
So, yeah, a 200-day average does matter until it breaks. And then all of a sudden, the algos and everybody looks for the follow through. So, yeah, just be aware that when you're trading off of well-established things like a 200-day average, every single person has it on their machine. Everybody's looking at it. And that's why
that's why it's a self-fulfilling prophecy a lot of times, especially in crypto. So that's why I was wondering. But it also gives you a signal. So for me, I'll wait till you break the 200, you retest it, and then you break to the upside, and then I'm on board with you. Then I'm jumping on your side of the ship. So, there are ways. So that would be the same here. And quite honestly, your 97, 95 is right around that 50-day MA right now. So you've got those. It's funny how, the levels do matter even when they don't, so to speak. You are using them to get to your numbers. But for me, that shows confluence of technical analysis together. And that's where I like personally, those are spots that I like to look for to enter trades or to exit trades. So I do think that is, what I more wanted to point out too is that those areas do point out, towards those MAs also. What else are we looking at? What other pairings do you want up on the board here, Mr. Flanagan?
Quickly, I just wanted to mention Banxico, which is the Central Bank of Mexico. They cut interest rates from 7.5% to 7.25%. So the problem there is that so much money, as we've been talking when MEX rates were over 10%, it's the parking lot for available funds. If you don't want to trade outside of North America, you buy MEX. Now you're earning 7.25%, but the interest rate differential is narrowing. And what I was concerned about is that the Central Bank of Mexico signaled that more cuts are in the pipeline because the economy is weakening.
Right.
So that was something I wanted to bring up because if dollar MEX begins to get, it's presently around 1854.30. If you begin to establish yourself above 1862, that could lead to quite an outflow of money that's parked earning a higher interest rate back into the U.S. Something just to keep on the board. 1862 is the level. Other things that have happened. Bank of England. Well, now they're saying it was a dovish hold. I love these terms. A dovish hold.
Yeah. What does that mean?
So they have indicated that the economy is definitely showing weakness and that they are still on a path to lower interest rates, but not just yet. Meanwhile, on November 26th, the budget gets proposed. Now, the Labor Party ran on no tax increases, and they're about ready to put a new budget in that's going to be loaded with tax increases. And you want to see how fast things turn. Watch the electorate and how fast that government begins to change. Now, in England, the interesting part is, like many of the countries, you can end up with a no confidence vote. And that means the government gets toppled and they have to have new elections announced. Now, we don't do that in the US. I don't know which side is better. You can end up in a situation like France, where you end up with a government, boom, toppled. Government, new, toppled. Now they've got 7 governments, and it looks like this new government is hanging on by a thread in France. So don't necessarily think that that's the ideal situation. But anyway, UK budget November 26th. Sterling is the one I'm watching, presently around the 131, 35.40. I do look to sell anything close to 132. I think that's a great short. I do think sterling is destined for a play under 130, and that's the one I really wanted to highlight to the.
Okay, I love that.
Yep.
There you go. Okay. Anything else you're watching for this weekend? I mean, I don't know. You never know what's coming next, right? I don't know where the next world's.
It's going to be two things. One, China has their inflation numbers come out on Saturday evening, I believe. So Sunday, you'll see those numbers. Very important, because China is, in my view, is deeply slipping into a deflationary environment. Now, Japan runs 0 interest rates for roughly, 10 years or more. They were entrenched in deflation for over 25 years.
Right.
China is slipping into that deflation. So watch that number. If that does come out in a negative territory, the government is their rates are at 3%. They're going to have to drop interest rates, and they're going to have to stimulate. And that's a difficult thing, because China, when you begin to look at the official figures, China's deficit is huge in comparison to a debt to GDP ratio. So something to keep in mind. Second point would be, do we get some momentum on the government shutdown in the US? I still hold very much to my quantum convergence. I will put a piece of paper out so that I can explain it shortly. But I do think that once we get through this, the sugar rush that will hit the markets is massive, something we have not seen before. And, we should be reacting accordingly. So as bad as things look on a Friday morning, and watching the price action of the last few days, that can turn on a dime if we get an agreement. Now, everybody knows that. So watch, if you don't get an agreement in a very short order, I would say in 5 days, then the other side is going to push the nuclear option and simply go for a 50-seat majority is going to get them. And I think that's going to force the sugar rush back into the marketplace. But let's hope that cooler heads prevail.
Absolutely. Yeah, we don't want that. We don't want that to happen. Even Johnson has said it, and neither side wants to see it because they don't want the other side to do it. So thank you, Mr. Flanagan. Quasar Markets Live. Everybody, thank you for joining us. We appreciate it so much. We'll be back with Mr. Flanagan on Monday to find out, what has happened over the weekend and how do we trade it next week. Everybody have a fantastic weekend.